So let's look at question number 7, preparing financial statement for incomplete records. Tarek, the owner of Best Price Furniture Stores, has not maintained a full set of accounts during the year ended 30 June 2018. However, he's able to provide the following information about his business. So all these are his assets and liabilities, opening and closing. So you can see the first date here will be the opening, the 30 here will be the closing. So then you have your cash book extract, how much you have in your opening balance, how much you have in your closing balance. Calculate the business's capital at 1st July 2017. So all we need to do here is we need to calculate the opening capital. So let's do that right here. Capital. Asset minus liabilities. So assets, you can see that they are bank assets. Will be my bank 8420 plus 12,400 plus 14,180. Prepaid rent. Prepaid rent is also an asset, plus 350. Trade payables, no, those are liabilities. Trade receivable. Wages accrued, no. Okay, so these are my total assets and then my liabilities. So let's look at my liabilities. So liabilities will include trade payable 8240, wages accrued. That's it, nothing else. So these two will be my liabilities. So you can prepare a statement of affairs to do this, but if you don't want to do it, it's okay. Okay, so my assets will be, my total assets are 8420 plus 2,400 plus 14180 plus 215 plus 1,550. 57,400. And then my liability should be 8240 plus 420. 8660. Okay, so once that is done, we should be able to calculate the business capital. So capital is asset minus liability. So just take this, subtract this, look at our answer, 48,740. So this is the opening. Right. So once you get your opening capital, you're supposed to calculate the next one, which will be your missing figures for all of these. Okay, so we don't need to calculate the profit here yet, because we only need to calculate what is the opening capital so far, and then we calculate all the missing figures here. So we don't know our credit sales, credit purchases, rent, wages, and depreciation. So credit sales, we can do the same thing. So this is for question B. So let's calculate credit sales. So credit sales, if you know what happens, you can actually use the unknown method, whereby we start with opening trade receivable. Then you try to progress yourself by adding and subtracting to get your closing trade receivable. So what we have here that will affect my trade receivable will be credit sales. We need to add, so it will increase my trade receivable, and I will have to minus off my payment that I have received. So these are your payment received. And then is there any discounts here? No. And that's it. So once we get to here, then we can get our closing trade receivable. So what actually happens here is that my unknown is my credit sales. Let me just zoom out for a while. So my unknown is my credit sales. So my opening trade receivable is 11,550. So plus my unknown, I'm just going to label it as X. And then I'm going to subtract the payment that I received, which is 11,116,510. Then this will equate towards my closing trade receivable. So X is my unknown, where you can actually see or actually find which is my credit sales. Okay, so I'm just going to write here credit sales is equal to X. Okay, so once this is done, let's just calculate what my X is. So X is equals to 12,690 minus 11,550 plus 116,510. So this should make my answer for my credit sales. So I'm just going to press it. 2690 minus 11,550 plus 116,510. So 11768. So this is my total credit sales. So I can do the same thing for credit purchases. So it is my X again. So I think my trade payable, my opening trade payable, which is 8240, plus the total purchases that I made, which are my credit purchases. So I just put it Y. My credit purchases, then subtract the payment that I've made to people, and this should equal to my closing trade payable. So let's try to find Y again. X at 80 minus 8240 minus plus 5720. The Y is equal to 1718 minus 240 plus 5720. 8,750. And it's credit purchases. Then next, we need to calculate our rent. So if we're calculating our rent here, which is our figure that we need to find out here, means the rent that is incurred in total for the year, for this financial year. So it's the same thing like how you are calculated for income statement previously. So initial rent that you have is prepaid. So prepaid is for this year. So this one you have to use logical reasoning or logical analysis. 850, it belongs to this year, so I'm just going to put it here. And then I paid 11,470, so I just add 11,470 because I paid, I do not know how much of these belongs to this year, so I'm just going to make an adjustment by looking at the closing here. So 720 is prepaid, means it's for next year, so I'm just going to subtract that out. So this should give me my total rent. So 850 plus 11,470 minus 720. 11,600. This is my total rent. Okay. That I incurred this year. So the next one will be wages. We do the same thing, but you look at this, accrued 420. Okay, so let's not start with the opening here. So always start with the payment that we have made so that we can make the we can do the adjustment. So 15,220, we have to remove wages accrued from last year, which is belongs to last year. But I did make a payment this year. I paid for what I owed last year, so I need to reduce it because I'm only calculating how much I need to pay this year. And then at the end of the year, I accrued 710. Oh, sorry, yeah. My wages, 31,460. That's general expenses. So I need to calculate how much I actually owe this year. I need to add it in. Then I can get my answer. It's 420 plus 31,750. So this is my total wages that that is in my income statement this year. And last one will be depreciation. Shop fittings and equipment. Okay. They didn't mention to me like how to calculate depreciation here. So you don't need to do your depreciation account, provision for depreciation account. No. By the looks of it, there is a change in value here. So we're just going to use something called revaluation method, or we're just going to look at what is the net book value. It means this is how much it is in the beginning, how much it ended to be at the end of the financial year. So the difference here is how much it has dropped in value, which is what we call depreciation. So 22,400 minus 19,900. So this is my The difference will be my depreciation. 2,400 minus 19,900. 2,500. Okay. So this is sorted out. Everything done, then we can prepare our income statement. So let me just highlight all the important amounts here. All my important amounts. Okay, pretty much sorted out here. So now we need to do our income statement. So the amount that has been utilized, I just remove it, or the bank one, not really yet. This one, okay, inventories. Okay, we're opening inventories, closing inventories, done, prepaid rent, okay. All right, so now let's start with the income statement. So since we don't have any form of cash sales, I would just assume all my sales are in terms of credit. So let's do C, income statement. So income statement we start from sales, which normally they call them revenue. So I'll just put it, we say, let's just put it at the end here, 117,650. Done. And then I suppose there's no returns in whatsoever, so now we just have less cost of sales. Less cost of sales, we start with opening inventory plus at purchases less closing inventory. I didn't see any form of carriages, so we don't need to include those. So opening inventory is 14180. Purchases. 14180, then purchases 58750. So we can total them up here. You can see 72930. So done pretty much. And then we have to reduce the closing 12380. I'm just going to put a negative here. You're supposed to put a bracket, by the way, so I can see my sum is 60,550. Oh, I'm just going to put it here instead. So it's a negative figure as well. It is not just a negative figure, it is supposed to be a subtracted figure from this. So I'm just going to put negative. It's supposed to put a bracket. So you're just going to find this one here, 57100. So this is what my gross profit is. So this would be my gross profit. And pretty much sorted up to here. Now you need to minus all your expenses that you have made, so things that you have used. So I'm just going to look at what we need here. We need our rent, wages, depreciation, and something else. So let's put this wages or general expenses. Okay. So less expenses, rent, wages, and depreciation. And then general expenses. I think there's anything else I need to add here. Rent done, expenses done, which is then drawings not to be done here. But everything looks pretty sorted out. So let's just put in the figures. 11,600. Wages. 31,750. 2,500. General expenses. I'm just going to take here because there's no adjustment to it. So this is my total. 61,000. So I'm just going to put this as a negative figure again, because I'm supposed to subtract it out. So I'm going to get negative 3,900. So this is a loss, by the way. Right now, let's do our statement of financial position. Start with your non-current assets. So we get shop, fittings, and equipment. 9,900. And I think that's about the non-current assets. Then just do our current assets. So we have our inventories, trade receivable, cash at bank, prepay rent. I think that's about it. So let's just double check. Yes, 1, 2, 3. Bank 1,570. Trade receivable 1,690. Inventories 12,380. And prepay rents. Prepay rent is an asset because you prepaid your expenses, you have not used the services, so 720 right here. Which might total this up and put it to the right. 27,360. It is to be added so that I can get my total assets. My total assets would be 47,260. There's my total assets. I'm just gonna close it. I'm just gonna find my capital here. So my capital will be, I have my opening figure. The opening figure will be 48,740. So we need to reduce our loss. If it's a profit, then we just add them in. Since it's a loss, we have to minus it out. So the number here is 44,770. And then we need to less some drawing as well. Drawings can be seen in your cash flow. This is only a cash balance, 8,000 here, so it is to reduce the capital as well. 8,000. So we should get a figure of 36,717. Nothing to be done here after that. Then let's look at our current liabilities. Trade payable and accrued wages. Trade payable, look at the closing amount. 970. Go down here, 9,980. And then accrued wages. Accrued wages will be 710, or wages accrued is the same thing. Just add them together. 10,470. Then we get our amount here. These two we add it up together, 47,240. Something's a bit off right here. Look at that trade table once more. Oh, 9780. For the total will be 10,490. And the total here will be 47,260. Once you get your two figures that are exactly the same, you can consider yourself done and correct.